Welcome back to episode 6. So now we're gonna get into the 4 hour chart, which is my favorite time frame. So right now we're just gonna look at a bit of past data on euro dollar and just have a look at how I approach the market, how I use 4 hour for that key market structure. So we see with euro dollar here, we've got this nice, like I say, like how I like to approach price. You can see we've got this low, and then we've got the highs, and then we've got the lows like this. So the reason why, like I said to you before, I've started to draw my channels like this is because I feel like you just give price a bit more freedom, you give price a bit more room to breathe. So with euro dollar here, we see that nice A, B, C, like we said, nice. So that was a 78.82% rejection. Then we see here we had a 66% rejection, and in this example here, we rallied right above and actually took out those highs, which would have been a stop. So you would have hit your stop loss. So let's just glance at risk to reward, yeah, just to give you an idea of why risk to reward is the only thing that matters. So working through this structure, so you see here euro dollar. So we're gonna just say, for argument's sake, we take all our entries at 66%. As through my backtesting, 66% is usually where euro dollar comes down to. And then we look at here, so we roughly would have got a 2.3 risk to reward there, so that's a nice 2.3. We're then expecting euro dollar to do the same thing again, so we're expecting euro dollar to pull back up, and then we're looking for that short again. So again, 66 would have been the best entry point on that occasion. 97 pip stop loss again, and we would have taken 2.3. So that would have been 2.38, 2.53. So you can see that's a nice, or just over 5% there. And then on this occasion now, we would have been doing the same thing. We would have had our high mapped out, we would have had our low mapped out, we would have taken our short at 66, and as you can see on this occasion, we would have actually hit our stop loss. So that would have been 2 winning trades, 1 losing trade, and you would have been just about 4.5% up. So then we, again, like I say, dive into what I like to call the characteristics of price, which for me is why I like the 4 hour the best. So when you see we've got these highs here, so you can see price did take these highs out, which is obviously our daily region, but we didn't maintain above this level. So to me, what that shows is manipulation. So I would have been stopped out, and in fact I did take this trade and was stopped out, but I ended up still turning this trade into a winner. So how did I do so? So for me, we did see price start to stagger here just before there was a move. So it was FOMC. I remember it like it was the other day. And then we saw price start to show a bit of resistance, and then immediately FOMC came out, price rallied all the way up, then we dropped. So of course I didn't get in straight away. My cue to getting back on price is based on, like I say to you, my structure. So where we've seen this high here, we've seen this low. So our level of invalidation for bulls is now here. If we go below this level here, we now turn bearish. So for me, it was easy as just waiting for price to pull back up. So you see on this occasion here, we got 38.2. Usually I would be looking for 50%, or at least into the 61 area, because like I showed you in previous videos, this is more the zone that I'd be looking at. But the reason why I did take that entry a little bit lower was because when I see that doji after a move, and then again I'll show you the failures to move higher. So 1, 2, 3, 4, 5, 6. For me, that's showing me we're not gonna get back into this region, even though I know invalidation is above here. My ideal entry is all about your ideal entry. My ideal entry would be in the supply zone, which is again something I'm going to touch on later in the episodes. But for me, because we've got this failure to move higher, we've also got a strong, I'd say, corrective structure here where price is getting very thin. We then get a consolidation in this candle here. So price gets very finite. So when we look at this little range here, like I said, I like to see price failing to move. When we get that breakout, then we can look for that short. So if you didn't get in there, for me, you could either sell here. Once that candle closes, would have been here, or you can drop down into the hour, which is our next video. But for argument's sake, say we stayed on the 4-hour, stop loss is there, and your first target offers you just a 1-to-1 basically. And if the price continued to go lower, you would have got a 2. So you would have been looking for price basically to come back down to here, which it did, which had offered you 2.6. So that's how I ended up getting back in that trade. So if we just take away these previous, so let's just take away this previous analysis, so we can just have a little clean slate here. So with euro dollar now, let's watch how price unfolded. So we've rallied back down into, like I like to use the line chart just to get an average low. So for me, this is our average low here on euro dollar right there, which will be the candle close. So you can see we've come down to target. Let's watch how euro dollar behaves now. So we start to create a range between so we start to create a little range. Price starts to break. So we're seeing now, once we've hit this daily support, we're now starting to get what? So we cover again the same thing. Well, now we're starting to get bullish market structure. Yeah, so in the form of higher highs and higher lows. So this all should obviously be making sense now. So if we're bearish, and we should continue bearish, I like to always give you guys an example. If we're bearish and to continue bearish, we shouldn't see price, it's always the same thing, we shouldn't see price get above this region. If price gets above this region, what are we now looking for? We're now looking for price to retrace. So exactly almost identical to the higher time frame setup that we've walked through on a few other occasions. So now once we see price has broken through this area, now we're looking for returns. So if we look at 61.8, euro likes that as well. We also did get our 66. So if we get our 66%, would have been on that wick. Here we can see we only need a 23 pip stop loss. Where would I be targeting? So for me, let's get our line chart back out. I would personally be targeting the average of those highs, which is here. And that is just around our third target, but we could have got it for around 4.7% on that trade. So when we look at euro, we're staying bullish. So we get corrective structure here. We get that corrective structure here. We break higher. We get a little bit of consolidation. We break higher. So with euro dollar now, we continue to see, as long as we stay above this level here, we should continue to move higher. So when we're looking at euro, very simple, you see that. So you look at euros moving up in stages. Like I said, price moves in ranges. So we should be staying above this level if we're going to continue to move higher. You see euro dollar finds support, finds resistance, starts to interact with that line. But we get that massive breakdown. So you see this breakdown through that level. So for me now, euro is no longer in bullish structure. So again, like I say, let's use our line. So I like to look at it like this. So as long as we maintained, so let's just pull it back again. So there for me is the indication. As long as we maintained above this and also our last valid level of support and resistance, we should maintain that bullish momentum. As you can see, we're making higher highs, higher lows, higher highs, but then we had that failure. So notice again, just like the higher time frame, like I said, price always repeats itself in different ways. We had 1, then we had 2, then we had 3 failures to move higher. So it's all, the key is always in the failures. When we break, we're now looking at price to retrace back into here, and then we're looking for price to move back lower down to the downside. So let's have a look at price. We see we get a strong sell-off and we find that break. So for me, that's our high down to our low. So we found our high, we found our low. So now we're looking at a retracement back in. We don't obviously know where that retracement is going to come. So we just wait to see where we see price. So we see a bit of consolidation. price starts to edge back up, 38.2. So on that occasion here, 38.2 just shy, and it would have hit our target. So we remove that fib, and you can see euro absolutely melts. So once you create those lows here, euro strong break retest, melts down and creates a fresh low. So usually after making a fresh low, you will see price start to pull back up. So let's just watch how price reacts. So we pull back up, come back up again, because now we've created a fresh daily low, which would be here. So we've got that fresh daily low. We come back up, see price. So let's just pause this. Let's pause this, just delete that old price because that time now changed. So now we've got our fresh daily low right here. Okay, and then let's have a look at price. We're waiting for a tradable scenario. Right now for me, price is just moving. There's nothing that jumps out to me yet. So it's about knowing what is a trade to you. I always say that to everyone that I've taught. What is a trade for you? Is price just moving and you want to guess where it's going, or do you actually have a trade set up? So when I'm looking at price right now, we know we've got our low here, and it seems to be like we're in a ranged environment between 1.25 and potentially between 1.18. So that's our potential range environment right now. So still no real tradable environment for me. We continue to see price react directly off that level. Price potentially is going to head back up to 1.25 as we're in this ranged environment. So I love this replay tool because it's so great to be able to watch the way price unfolds, the way because you're essentially watching human psychology right now. So you see we're just orders rejections, and then you see what happens, price starts to reject. Look at the manipulation that you see. So this is why I love this replay tool. It's such a great tool to be able to look at how price moves, how price reacts to areas. So for me, still there's no tradable set up yet. So this is why a lot of trading tends to be, you have to wait. You're waiting for your edge. You need to know what that edge is and be able to wait for it. So again, we look at where price came up to. So let's just have a pause. We are using a 4-hour chart. So price came back up to that 4-hour high. So for me right now, we've established a bigger range. We've broken through again. So when we look at that characteristics of price, we have to pause now, because this is essential. This is something that you have to be able to notice. So you see we had this low here. Let's take this magnet. So we've had this low here. And then what have we done since then? Essentially, we've made a new high. So just look at price as an overall movement. That's what I mean by structure. Don't look at pullbacks, higher lows, or double tops. Just look at price as an overall. We've had an overall up movement. So that's telling me buyers are in the market. Yeah. What we're looking at now is the retracement back down. So that retracement back down, for me right now, you don't know if that's the bottom. This is the lowest probability, in my opinion, because we don't know if this is going to hold or if we're just going to come all the way back down to the bottom of the range again. But because we can see 66 is our entry point, we can see good probability in terms of the bottom of that range. If it goes back down there, potentially we could get stopped out, but 66 is our trade edge, and up there is our take profit. So that's the setup that we're looking for. A, B, C to expand to the upside. So what we can see now, higher lows come in. So we've seen a higher low come in. Let's just take this fib off again. So we see that higher low come in here. Again, I really want to show you guys how finite price can be. So look at the turning points in price. So that's what I mean by the actual characteristics of price. You can see here, we have a range. Price breaks out of that range and we test it, and then we break higher. Here, we've got that support and resistance. Like I keep saying, when price breaks through, we shouldn't see price return. If we do and we get back above, for me, that's the indication that this level is going to hold. So now for me, what euro dollar is doing now is creating. So once I've seen a swing low, a swing high, a higher low, we've now made a higher high. What I'm looking for now is, this is potentially bullish market structure. So now I'm looking at price like this now. Yeah, so let's just take off, let's take this off, and let's take this off, and let's just understand. So I'm looking at price like this now. Even let's take off our middle line just to make it even more simple. So we're now looking at price to continue to just respect this bullish range. So we see now price starts to drop down. We see that higher low get made again on a 4-hour intricacy. So again, same thing when it is bullish. It's just a different way that it does it. If we're going to remain bullish, price shouldn't have got below this area here, because that was our first area of support. We broke through and now we're consolidating. So for me, this is corrective structure. This is corrective structure now. This should lead to price drops, corrective structure, and then we see that drop back down. That's what we should see happen. We see euro, we get that breakdown, we get the retest, price comes back down, should hopefully come back down near 1.125. And then we see that break of 1.125. So now this is crucial, because we're looking at potential longs again. So that's your overall bias. So now we have to understand, how do we deal with this trade? So when we look at this area here, let me just make it a little bit more clear. Take this off because you understand that. So we're looking at, this is our area here. We shouldn't see price return back below this region. However, we did see that breakout consolidation and we've dropped down. So we need to wait for price to reveal itself. Is this a false breakout, or are we going to continue? How do we know if it's a false breakout or not? Because price shouldn't essentially get back inside of this area. So we shouldn't see price, same thing again, it's always the same thing. We shouldn't see price get back above this area if this is going to be a valid breakout. When we see euro, so we start to respect it, we start to respect that area, and then what do we see? Price is trying to break through it, buyers are trying to make it a false breakout, but no. So for me now, that's a valid breakout. So now for me, we've turned into bearish. Now for me, euro dollar is now bearish. Now we're just waiting for a way to enter this market, which could be a variety of ways. You could be entering this market at attempts to break through this area here, and you're going to put your stop loss above the area of invalidation, and you're now looking for price to come back down towards that round number 1.1, which would offer you a 6.2, which is a great trade. So let's look at how price unfolds. So we've still got this key level here in play. Price is breaking. So that for me now signifies markets have changed considerably now, because we've had this low again. So you guys already know how I like to draw it now. So I use the channel because I just feel like the channel gives you a bit more, the channel just gives you a bit more room. The channel for me just gives you a little bit more room to understand what's happening. So once we've broken through this area now there, we're now looking for shorts anyway. So we're looking for returns, any sort of returns. We're looking for shorts. Didn't quite, oh, that would have been our entry around here. So we're looking for those returns. Let's see how price should now start to drop a bit lower. So we're getting a bit of consolidation. And we have to also take into fact where we are. So remember, that's our 4 hour. So we got that consolidation return, lower high, and we sank right back down into that 1.1. Now we're seeing price. So again, this is another turning point. I just keep stopping it to make you guys understand my thought process behind trades. So now euro dollar. Let's pull euro dollar now, like I was just about to say, shouldn't get back above this region. That was previous support. So it shouldn't turn, price shouldn't break above this region. So now this doesn't need to be there anymore. Price shouldn't break above this region. which you see now price has broken above that region. So for me, that lets me know the potential bottom is now in the market. What do we see? A massive rally right back up to where? Round number 1.25. Bit of consolidation, market's getting a little bit choppy, but for me, we're possibly going to see a pullback lower before price moves higher. Now for me, I believe price is going to move higher. We're seeing consolidation. We're pulling back lower. Now it's all about whether or not is price going to break this low. That's what we have to ask ourselves now. Is this potential for buyers to enter the market? Because you need to understand our invalidation would be below this level if we're looking for longs, because we've already invalidated our bearish bias by breaking through this level. So this could just be our breakup, our retest to move lower. So that's the way I'd be approaching the market right now. Let's see what kind of reaction we get. So we're holding around the 70s, 80s. So this is quite a deep pullback in regards to euro, just floating around 60. So you would have spent quite a lot of time in and out of profit. Remember, stop loss below here. We've now gone into profit, rallied up a little bit. Price is still playing around. So this is why swing trading requires patience. It just requires you to understand what's going to happen. So you see now, stop loss would have been hit on this occasion because now we've broken through our key level. As we move on, now we potentially be seeing what's the next move for price. It's fine that your stop loss gets hit. Not everyone can win every trade. That's what something people need to understand. Not every trade can be a winner. So we're looking at characteristics of price. That's all we're looking at now. So we see that we're starting to get bearish structure. So we're seeing lower highs and lower lows. So again, we're waiting for invalidation. We're waiting for price to show us what direction are you looking to go in. So now we see another failure. Let's just speed this up a little bit as it is 4 hour. Just waiting for a price to show us something that we can utilize. So again, we're getting really choppy, still respecting this bearish trend. So let me just amend it. So now we're still respecting this bearish trend. So this is why I like price action and why I like the 4 hour so much, because we're still respecting this bearish trend. So as long as we're below this level, we should be looking for shorts. We've broken above, so we're showing a potential shift. Nothing's certain. We need to understand that what we're seeing now is a potential shift in price. What we need to see is price continue to pull up and then get a pull back. So now we're seeing a bit more buyers are stepping in the market. That's what I like to see. Now we've seen a substantial pull up, but now looking for that pull back because we've completely invalidated this whole structure. So this bearish structure for me now is invalidated. So now we're looking for that pull back to go long. So let's have a look at how price moves. So we're looking for that pullback. We're looking for that pullback ideally into along this region here. Price comes back into that 110. Price comes playing around into that 1.10. Start to get the buyers step in. We've broken below, so we're having a deeper pullback, pulling back in towards 1.1, which is what a key level. We've now formed a double top reversal here as well. So double top reversals are usually targets for price, but because of structures broken, we've pulled back down. Our invalidation level is here around 1.08. So that's our invalidation level. So this 4 hours letting us understand where we should be in regards to our daily structure, because our 4 hour daily structure has now been broken. So we're more inclined to bullish action. As long as 1.1 holds, we should be looking at bullish action, because now our fib, we're looking at characteristics of price, that we've gone from a low all the way up into a high. We've reversed. and we've dropped back down into the 61, 66 with a confluencing area of 1.1. We're now range bound, so this is a good area to potentially look for longs in and around this 1.1. What we can see, price is consolidating, so this is a good sign that we potentially want to move higher. Well, at a key level 1.1, price is consolidating, so we're showing a failure to move lower. You see, once we show this, price now rallies up. All we need to confirm, we'd already been in this trade from 1.1, but once we have a close above this level here, we're going to definitely target 1.1800, the 79800 level, and then essentially we should target 1.12. So just notice the characteristics of price. When it takes out a high, it usually retraces. Takes out the high, it usually retraces, because the market always wants you to be one step behind. That's why I urge you guys to utilize this trading tool as much as possible. Utilize this tool as much as possible. The replay tool. Everyone should be using the replay tool, especially when you're going back through price action. You're going back through just understanding what happens when markets are moving, how you should be looking at price. So let me just refresh this, let this catch up. So when we get back into euro dollars, apologies for this connection right now. So we can see here euro dollar just in and around this area, and you can see here we eventually did come back up and we tested. So it's about looking at price in terms of the overall structure move. So we rallied up, double topped, we've dropped, but our overall structure is bullish because we violated this bearish structure here. We shouldn't have got higher than this. So because we did, and we've made a new high, so once this high here was taken out, we've created a new high. We're essentially going to see a pullback. Then we get that retracement back into our key level. As we said, 66 is our entry, so we'd have the perfect entry. Stop loss needs to be down here for argument's sake, and also just to make sure you're wrong. And then we've seen the same sequence again, same series of events where we see a high, higher low. So a swing low, swing high, higher low, higher high, higher low, higher high. So we should be seeing euro pop up to 1.12500. So this is why the 4-hour chart is one of my favorite charts, because you can just get an in-depth look on price. You can zoom in, especially when in the next episode when I go down into the 1-hour chart, you'll understand how to really get great risk to reward, because a lot of people do ask me how I get those swing trades or those precise entries, and the key is to be having a higher time frame bias and zooming in, because everything is fractal. So every movement is a smaller movement inside another move. So the monthly is moving inside the quarterly, the weekly is moving inside the monthly, the daily is moving inside the weekly, the 4 hours moving inside the daily. So if you can understand how to manage that on a 4-hour chart, like you can see here, that's what I broke down earlier in this episode. You can see how cleaner it is on a daily chart, which is why I like the 4-hour daily connection that can be made. And when you're looking for your entries, you can go into the 1 hour and I can show you something that's going to absolutely change your trading career. So stay tuned for the next episode.